Warren Buffett's Ground Rules, book by Jeremy C. Miller. Learn about Warren's words of wisdom for your finances. If you only know one thing about Warren Buffett, it's probably that he's successful. As the fourth wealthiest person in the world, and the CEO of Berkshire-Hathaway, Warren Buffett has become a household name in the world of business and finance. His success sets a standard for aspiring investors to look up to. As a result, it's no surprise that many people wish they could enjoy personalized life coaching from Warren Buffett himself. And now, with this book, you can. Warren Buffett's Ground Rules, 2016, is an anthology of letters sent by the business tycoon to his partners. In these letters, Buffett outlines his key strategies for professional and financial success. He also demonstrates how you can implement them in your own life. Introduction. Have you ever been around people who had a lot of money and not realized it? Maybe you were chatting to the new couple down the block or a guy in your local coffee shop and thought, they're just an average Joe, until, that is, you found out something like where they work, who their family is, or how much their house is worth, and discover that they're actually a millionaire. If you have ever had this experience, then undoubtedly, you remember feeling incredibly surprised. Maybe you wondered why they didn't behave in a more ostentatious manner, or why you didn't see a fancy car parked in their driveway. Maybe you even felt like their house wasn't that nice. But above all, if you've discovered that a friend or acquaintance was a secret millionaire, it's highly likely that you had one big question on your mind. How? How did they get their money? How did they hang on it? How come they don't act like a millionaire? And perhaps the most pressing question of all, how can you emulate their wealth and success? Well, question no longer. Warren Buffett is one of these people himself, and he makes money management look easy. So easy, in fact, that as of 2020, he has an estimated net worth of $75 billion. And that's not counting his personal fortune or the money he has available to spend. So, over the course of his summary, we'll investigate Buffett's insights into his success and learn how you can get rich off the stock market just like he did. Chapter 1. Slow and steady wins the race. If you know anything about the stock market, you know that change is its only constant. Because stocks are constantly rising and decreasing in value in the blink of an eye, it's easy for investors to grow stressed and frantic as they race to stay on top of an ever-changing market. However, Warren Buffett knows a secret that many Wall Street investors don't. It's also a secret that high-level investors don't want the average person to know. You see, Warren Buffett understands that chaotic investing is not the way to go. Many people fall into the trap of assuming that you have to act very quickly if you want to profit from the stock market, and it's easy to see why someone would arrive at that conclusion. When the stock market can plummet at the drop of a hat, it's understandable that one might feel the need to monitor it at all times. This is the logic that motivates people to buy and trade stocks at a frenetic pace in the hopes of beating the stock market and reaping a significant reward from their investments. In fact, for quite a while, this has been the widely accepted standard for using the stock market. But Warren Buffett discovered that this strategy is actually not quite as effective as one might think. So, in order to understand what he discovered and why it makes sense, we need to start by unpacking the principles of the stock market, beginning with the basics. The first basic principle we should understand is investing. Already, we've discussed investing at length, but it's important to understand what that term really means. Warren Buffett defines investing as the process of laying out money now to receive more money in the future. So, now that we have a solid definition for investing, let's unpack the inner workings of the stock market and how to invest in it. We'll start with this simple and accessible explanation from professional investor and financial analyst Chad Langager. To begin to understand the stock market, we first need to know what stocks are. Langager begins by providing a simple definition of stocks. Stocks, or shares of a company, represent ownership equity in the firm, which gives shareholders voting rights as well as a residual claim on corporate earnings in the form of capital gains and dividends. Stock markets are where individual and institutional investors come together to buy and sell shares in a public venue. Nowadays, these exchanges exist as electronic marketplaces. Share prices are set by supply and demand in the market as buyers and sellers place orders. Order flow and bid-ask spreads are often maintained by specialists or market makers to ensure an orderly and fair market. So, now that we know more about investing and stocks, we can move forward and develop a better understanding of the stock market and how it works. Langager adds that the prices of shares on a stock market can be set in a number of ways, but the most common way is through an auction process where buyers and sellers place bids and offers to buy or sell. A bid is the price at which somebody wishes to buy, and an offer, or ask, is the price at which somebody wishes to sell. When the bid and ask coincide, a trade is made. The overall market is made up of millions of investors and traders, who may have differing ideas about the value of a specific stock, and thus the price at which they are willing to buy or sell it. The thousands of transactions that occur as these investors and traders convert their intentions to actions by buying and or selling a stock cause minute-by-minute gyrations in it over the course of a trading day. A stock exchange provides a platform where such trading can be easily conducted by matching buyers and sellers of stocks. For the average person to get access to these exchanges, they would need a stockbroker. This stockbroker acts as the middleman between the buyer and the seller. Getting a stockbroker is most commonly accomplished by creating an account with a well-established retail broker. This explanation helps us to understand how the stock market works and how the average person can buy and sell stocks. But this information doesn't tell us why someone would want to invest in the stock market. If it's so complicated and unstable, why would anyone want to put their money in the stock market? The short answer is that when you make smart investments, you can make a lot of money. Langager explains that numerous studies have shown that over long periods of time, stocks generate investment returns that are superior to those from every other asset class. Stock returns arise from capital gains and dividends. A capital gain occurs when you sell a stock at a higher price than the price at which you purchased it. A dividend is the share of profit that a company distributes to its shareholders. Dividends are an important component of stock returns. Since 1956, dividends have contributed nearly 1/3 of total equity return, while capital gains have contributed 2/3. While the allure of buying a stock similar to one of the fabled FAANG quintet, Facebook, Apple Inc., their share abbreviation is AAPL if you're interested in buying stock in this company, Amazon.com Inc., AMZN, Netflix Inc., NFLX, and Google parent Alphabet Inc., Google, at a very early stage, is one of the more tantalizing prospects of stock investing. In reality, such home runs are few and far between. Investors who want to swing for the fences with the stocks in their portfolios should have a higher tolerance for risk. Such investors will be keen to generate most of their returns from capital gains rather than dividends. On the other hand, investors who are conservative and need the income from their portfolios may opt for stocks that have a long history of paying substantial dividends. So, now that we have a crash course in the basics of the stock market, we can understand the necessary terminology to appreciate the author's advice. In the next chapter, we'll use our new knowledge of the stock market to explore Warren Buffett's top tips for making your fortune through wise investments.